Now, let's move into the last section of this chapter, and let's talk about some of the ratios that are out there. We're going to talk about the acid test ratio, and this isn't dropping acid on something and seeing if it burns. We're going to look at the cash test, and we're going to take a look at AR turnover ratio and days sales in receivables. So, what we're going to be looking at here is we want to see some relationships among assets and liabilities. And some of these ratios that we're going to be looking at here to evaluate my business performance is the acid test ratio, AR turn ratio, and days sales. So again, we're going to have a partial balance sheet out here for Kohl's, and we're going to evaluate some of these formulas. So we got cash and cash equivalents, we got current assets, we got current liabilities. This is all good. The other thing we're going to need out here is to take a look at merchandise sales and services also. So we're going to need some other information too, which we have. Now let's talk about the acid test. Again, I want to make sure that I've got my company's ability to pay current liabilities. What we're really looking at here is quick assets, meaning truly cash type assets divided by its current liabilities. So with the current asset test, the higher the ratio, the better the ability that you have to take care of your current liabilities. And usually, if your asset ratio is 1 or higher, this is good. So in this case here with Sears Holdings, we're going to take in our cash and with cash equivalents, short-term investments, and net current receivables divided by current liabilities, and we're going to get a quick asset test of 0.12. Okay, so we've got about 12 cents of quick assets to pay for each dollar of current liabilities. Again, the higher the acid test ratio, the better off you're going to be looking. Now, which of the following is included in the denominator of the acid test ratio? This is current liabilities, all current liabilities. This one's going to be C. 21. Use the following to calculate the acid test ratio. So again, I need to have cash, short-term investments, net current receivables. Take those three numbers divided by current liabilities. And that will do. We're not going to include inventory because it can't be converted to cash very quickly. So if I take the cash plus short-term investments plus current net receivables and divide that by total current liabilities, I'm coming up with an acid test of 0.54. This one's going to be D. Next one. What is the acid test ratio for a merchant with the following account balances? So I got cash, short-term investments, net current receivables, and again, we'll divide that by total current liabilities. And again, my acid test is going to be 0.44 or B. So let's take a look at the AR turnover ratio. AR turnover ratio, this is the amount of times, the number of times that I'm going to collect my average receivables in a year. The higher the ratio, the faster the cash collections. Now, the ratio is also going to be helpful for me when we take a look at computing out days in sales in accounts receivable. So this is the number of times during the year that the company is going to collect its average AR. Now, with something like that, normally that's going to be net credit sales divided by average net receivables. Now, I'm talking net receivables here. Okay? This is gross accounts receivable minus the allowance. So we're looking at net accounts receivable. Okay? So again, in this case here, we've got net credit sales here of $25,146. We'll take our average net receivables of beginning net receivables plus ending net receivables divided by 2. And we'll come up with an AR turnover ratio of 59.31 times a year. So basically, this company is turning over its receivables 59.3 times a year. So for 23, for Logan Sales provided the following information. Net credit sales, beginning net AR and ending net AR, calculate the accounts receivable turnover ratio. This is going to be I'm going to compute out my average net AR, which is going to be 43,000 plus the 20,000 divided by 2. And then I'm going to take my net credit sales divided by my average AR, plug all those numbers into the formula, and it should come out with B 25 times. Now, it's nice to know the AR turnover rate, but what I really want to know from a business perspective is how many days in a year does it take to collect the average receivable? Okay? That's what I really want to know. And again, the interesting point here is the number of days sales and receivables should be close to the number of days customers are allowed to make payment when credit is extended. Shorter the collection period, the quicker the organization can use its cash. And that's why days sales and receivables is so important. You want to get that cash turned around in a very quick manner. Again, if you have a low days sales and receivables, that's how quick you're getting your cash from credit sales. So again, if we drop in this formula, the formula is going to be days sales. It's going to be the 365 days divided by your AR turnover ratio. And that's going to compute out to your days sales and receivables. Okay? Again, the lower amount of days, the quicker you're getting your cash around. So really, you want to see days sales and receivables as low as possible. So in this case here, a company has net credit sales of $91,000, beginning net accounts receivable of 22, and an ending AR of 19. Calculate the days sales and receivables. So here I'm going to have to figure out my receivable turnover ratio, and then take that turn ratio and figure out my days sales. So in this case here, my turnover ratio is going to be net sales of 91 divided by my average net AR of 22 plus 19 divided by 2. So I'm coming up with an AR turn ratio of 4.44. Okay? Now, for the days sales and receivables, I'm going to take 365 divided by my AR turn ratio of 4.44, and I'm going to come up with days sales and receivables of 82 days. This is D. Okay, this is going to conclude the WebEx session for Chapter 8. Again, as always, if you have any questions about any of this material that I discussed in the chapters, feel free and email me any comments or questions that you might have about this material.